Hello everyone, welcome back to another edition of Diamond's Edge Trader. Greg Diamond here, editor of 10 Stock Trader at Stansberry Research, back off from Las Vegas and the Stansberry conference. I just wanted to give a quick thanks to everyone who came. I had a great time speaking with everyone. It's my favorite event of the year, just to be able to meet everyone in person, and had some great conversations. And what I want to start today by explaining something that I was talking to an alliance member about on the closing ceremony of Wednesday of the conference, and that is, I really didn't meet that many bullish or that many bearish investors. Almost everyone thinks the stocks are going to continue to grind higher, in this low volatility phase, if you will. Many of the speakers had the same type of outlook, and they may well be correct. But this reminded me of the Las Vegas conference back in 2021 at the end of the year, and it was a very similar setup. I didn't meet anyone that was bearish. Everything was bullish about everything, and that marked the top. And we saw this big round of volatility in late 2021 and all of 2022. I'm not saying that this is going to be the exact replica of that. Okay, but what I am saying, and what I'll explain to you today, is that when I see that type of one-sided bet, okay, and that usually means that the market will do something that most don't expect. Now, we've had this grind higher, and a lot of that has been attributed to a potential Trump win. That is the consensus anyway. Now, as I explained in my speeches at the Stansberry conference, that could very well be the case, and you get this parabolic move higher if Trump does indeed win, or it could be a sell the news event. The market is already priced in that Trump would win, and then we have this drop off. The other situation, obviously, is there's a surprise and Harris wins. And would that be something that the market, takes into with a volatile environment? I'm not going to sit here and tell you who's going to win. And you also have to factor into account what's going to happen with the Senate, what's going to happen with the House. Will it be split? Will it be a red wave? Will it be a blue wave? How is the market going to react if there is a surprise? That's into next week. But what I want to focus on this week is that we are in for a lot of volatility, no matter which way the market goes. And I outlined some trading strategies that I'll be using really over the next few months to take advantage of these, what I believe is to be potential huge moves. And that starts with earnings this week, okay? Advanced micro devices, Apple, and then all the big tech, okay? And then you can see here on this chart here, we also have this week, in addition to important earnings, GDP, core PCE, which is what the Federal Reserve likes to look at, and then obviously payrolls on Friday. So we're in for a huge amount of data points this week, and then we also have earnings, and then that gets us into the election next week. So no matter how you cut it, we're going to be looking at some volatile moves. So that's kind of the general 10,000 foot level that I'm looking at in terms of consensus trade, bullishness, and then looking for a contrarian move based upon what's happening with these catalysts, and then I also want to point out, this is the Dow Jones Industrial Average, okay? And now this is a cycle inversion of what I was expecting heading into the election, call it late August, early September. Now, I pointed out you can see these dates here, late August, September, and then in mid-October, and these are all Gann natural dates. Now, as you can see, these mark short-term tops. And I had a game plan for what we would do if we were to start rallying way above this, okay? But now you can see here, I've outlined this 1, 2, 3, 4, 5. Let me zoom in here. 1, 2, 3, 4, 5, ending diagonal, and we've had this drop, okay? Now, could we rally this week and try to retest this, maybe make a new high, potentially? It could happen, but we're seeing divergence between the Dow, between NASDAQ, the semiconductors haven't made new highs, small caps haven't made new highs. So, this is really, to me, looking like a cycle inversion where instead of we have a huge low going into the election, we actually have a high. Now, again, I can't rule out the fact that we have this other parabolic move that just rip roars higher. Okay, that's fair. However, as I outlined to 10 stock trader subscribers this morning, I have certain trade strategies to be able to take advantage of, uncertainty around the election. And I'll get into that next week. All right. But we also have here on the Dow this third lower high on the composite index. And this triggered a sell-off last week. And, this was something that I was looking at. So again, you can see now the composite index has gotten into, a bit of an oversold level here. All right. So yeah, we can see a bounce, and between all the fundamental catalysts and earnings, I wouldn't be surprised to see some volatility. But if this new high, or if this high can't break above these October natural gain dates, all right, and then we start getting to the election, and then I've also outlined, the next set of time factors to watch, into the end of the year, actually into the new year. All right. So the message today is going to be expect volatility, and it is going to be it's going to last, I think, over the next 3 to 6 months. So get ready for an exciting time, a lot of volatility, I hope, because that's what as a trader that I look for. And aside from that August dip, this 2024 hasn't been that as volatile. So I think that's about to change starting this week and then heading into the rest of the year. Thank you very much. I'll see you next week.